Hey traders, Jason here from Leavitt Brothers. Hope you're well. All right, today I'm going to talk about taking profits. I'll use some actual setups that were profiled at Leavitt Brothers as examples, and I'll talk through what to do in different situations. Before I get into some charts, let's lay some groundwork. Overall, the most important thing that you must do is identify what kind of market you're dealing with. Is it a kind and gently trading market that's very forgiving? Or is it range bound, or is it volatile with lots of gaps? The kind of market you are dealt dictates how you manage trades. This is a major error that traders make, or maybe I should say it's a major thing that they don't do. They have a system and they force that system on all markets no matter what. They don't recognize that last year maybe they could use loose stops and ride a trend for a month or so, but in the current market, trades need to be shortened up. And they can't, so they can't force last year's management technique onto today's market. All right, so let's go look at some examples. Okay, here is COM. This is a setup that we posted at Leavitt Brothers back in April. So the stock had moved off its low, was consolidating here just under 10.5. I'm not going to get into what the entry technique is. I'm not going to get into how I establish my targets. That stuff is for a different video. What I want to talk about today is just how to manage trades that you're already in. Actually, more specifically, how to manage winning trades. Okay, so this was the setup, looking for a trade from, breakout area of 10.5 up to 12. I don't really play breakouts. I tend to buy dips within uptrends, but drawing a resistance trend line gives us like a frame of reference. It tells us like, hey, something is probably going to happen at this level. It's either going to break out and run, or it could break out and fail, or it might get rejected there. It just gives us a frame of reference to judge it from. So anyways, this was the setup. Stock had been trending up for about a month, resting in a zone or range between 9.5 and 10.5, and I was looking for a 1.5 point move up to 12. So let's look. Let's now zoom in with this 60-minute chart and see how things played out. All right, so here's the 60-minute chart. This line here is the trend line from the previous chart. And as you can see here, it broke out through 10.5. It trended up, traded very quietly here, which is really nice. And then it moved up into the end of the day, and it closed right here. Now, next day, it gaps up to here. Okay, when I'm in a stock, now considering I said at the top that the most important thing you can do is recognize what kind of environment you're in. We're in an environment where it's very volatile. Stocks are gapping a lot. The market can gap up or down 100 points on any given day. This is not a market where you can sit back and relax and let trades just play out with loose stops. You have to be a little bit more aggressive. Okay, so when I get a gap up like this, I'm at the edge of my seat. Okay, I'm gonna either, it's gonna gap and run, and I'm gonna try and ride it, or if it's gonna gap and crap, in which case I'm gonna at least get out of part of my position. So when it gaps up here and it starts falling during that first hour, I'm out of half my position. Okay, typically you can zoom in on a 5 or 15-minute chart, see a support area form, and then when it's taken out, I'll be out. Okay, so in this case, I'm out of half the position, somewhere in here. It has a so-so day. It closes near its low. So going into the next day, I'm thinking, look, I'm in from down here. I already took half off. Stock closed at its low. If this thing goes down early tomorrow or gaps down, I'm out immediately, no questions asked. As it happened, it gapped up and pushed closer to my target. Okay, and then the following day it like rested up there, and then again at the end of this day, if you're not already out, I'm thinking this, it was so close to my target to begin with, and now it's sitting down here at 11.6. If this thing goes down or gaps down, I'm out immediately the next day, and that's what happened. It gapped down. Okay, so a lot of these trades you can put them up with longer term charts, and it's like, yeah, I'm going to buy here and sell here. But the reality is, in today's market where you get a gap up like that, you got to take advantage of it. And you get a little gap down, that's kind of scary. Even if it's just a gap down and it sells off for like 5 or 10 or 15 minutes, that's scary if you're actually in a position. Okay, I'm in a mode where I'm erring on the side of taking profits too soon rather than too late. All right, next chart. Nice smooth chart. Here's an oil stock. CEQP obviously lost a bunch, formed a nice base. Frame of reference here is we have a resistance line at 8, target up at 12. Again, not going to talk about how I set targets. I'll do that at a later date. But this was the chart that I posted for Leavitt Brothers subscribers. Now let's zoom in with the hourly chart. All right, so you can see the trend line there at 8. Stock trades up here. Next day gaps up. Okay, when it gaps up, I'm thinking I'm going to move my stop close. Okay, if it gaps and starts selling off, I'm out of it at least half. But I want to let it run if it's gonna run. So it ends up gapping up and then running up a little bit. I move a stop up to take half profit somewhere in here because I don't want to give too much back. But then once I have a half profit and the group itself was doing fairly well, and I liked how this stock had broken out of a nice base, I was willing to give the other part of the position a little bit of space. Okay, so I was willing to sit through here, and then I got lucky because it gapped up and ran. Okay, closed near its high here, gaps up. I'm putting, moving stops into here, watching it very closely. Don't want to give any profits back, and so got lucky because it gapped up and ran. Got up here. Again, quiet afternoon here, so no worries. But even coming into this day, I'm saying, like, what's going to happen? It could gap down, and I don't want to give profits back. So what happened is it actually gapped up, and I didn't get the target here because this long tail here, that's not a bad tick. That's like real trading. The stock actually did gap up, and it sold off really hard early in the day, so I was out. Okay, didn't get the target. Not going to bargain or negotiate for more. It's an issue that a lot of people come to trading and they were very successful in some previous career, and they were successful because they can talk their way out of situations. They can negotiate or debate their way out of situations. In the market, you can't do that. Okay, you don't get to bargain or negotiate with the market. You take what it goes. It's a one-way street. The market does what it does, and you either accept it or you don't. Okay, so it's kind of frustrating when the stock gaps up like that and immediately sells off, but that's just the way it goes. That's the reality of trading. All right, next chart. Bloomin' Brands. This is a stock we've played a couple times. Restaurant stock sold off hard, moved off its low, was consolidating between 8 and 10. Frame of reference here, resistance line at $10. My target was at 13. Okay, so not a bad setup. Restaurant group beaten down, making a comeback. Stock had already doubled. Why can't they go another 30%, even if it doesn't make any sense? All right, so let's zoom in with the hourly chart. So same trend line here. You notice support here at the 50, goes through resistance. Okay, trades quietly in the afternoon. Next day gaps up. Again, given the current state of things, I'm on guard when the stock gaps in my favor like that. So it gaps in my favor, and let it trade a little bit. If assuming it doesn't gap and just immediately sell off, I'm going to let it trade a little bit, establish some sort of support line, and then I'm going to take half profits if it takes that out. So I'm out half here, and then I get lucky the next day as it gaps up and goes to my target, in which case I'm definitely taking more off. If I don't take the whole thing off, I'm definitely taking off. Okay, I don't, experience has told me that if you hold out and say, hey, maybe you can get some more, like 9 times out of 10, like it'll go up like this and come back down, and I end up getting out over here anyway. So I might as well just get out as I'm approaching the target or at the target rather than wanting more. Okay, so again, gap up here, took half, gap up here, got lucky, and ended up getting a nice trade out of it. AAOI, so this was forming, like the rest of the stocks, got hit hard, moved off a low, was basing, formed a resistance line at 8, looking for a 1.5 point move up to 9.5. Okay, this is the exact chart that we posted at Leavitt Brothers. Actually, I posted it in form of an hourly chart, but doesn't matter. All right, so what happened is the stock went above the resistance, struggled, came back down, struggled, found some support at the 21 EMA, support there, and when it got up to here, I started noticing that, like, all right, it broke out. This happens enough that I pay attention to it. It broke out, but it didn't get any follow through. There wasn't a whole lot of momentum. but you had like a new pattern setting up. Okay, so you had a series of higher highs and higher lows, and you had a new pattern setting up here. So I was thinking that, you know what, it doesn't make any sense to have a target right above a box like this. Okay, that 9.5 target was for that pattern, but this new pattern here needed a new target. So that's what I did. I said, look, if this pattern resolves up, it's going to blow right past 9.5, and we need a new target. So that's what I posted at Leavitt Brothers. So the original setup was a breakout at 8 going to 9.5, but then once this pattern formed here, I said, hey, most likely if this thing resolves up, it's going to go through our target. We need a second target. So that's what we were looking at. So let's go. Here's the hourly chart. This is what happened. So this is the original breakout. You can see where it went up and went back down, went up, came back down, and then that box that formed, was right there. Okay, so it ended up taking out that, went right through our target, came back down in this day, and then pretty smooth up, except for this little sell-off here. By the way, I'm taking profits here because that was the target for my original setup, but then I'm giving it a little bit of space, and then it ended up going to the second target. Okay, so I will do this. Okay, patterns change, and a pattern can morph into a different pattern, and I will change and put higher targets on. They're not guesses. They're not based on like, well, everyone else is excited about this, I'm going to like see if I can get greedy and want more. If a new pattern forms, then to me that's like a new setup, and I'll reevaluate it. All right, last chart here is Domo. Profiled this before. Here is a nice W setup, rallied up, was consolidating in like a wedge pattern. Resistance level at 15. I put my target at 20. This is the exact setup that I posted at Leavitt Brothers. So here is how it played out and how we manage it. So resistance level at 15 broke out really smooth. No big, no big pullbacks after the break. It's nice to get separation and follow through. Gaps up the next day. Not much weakness after the gap up. It kept pushing higher, so no reason to take profits. Then we get another gap up, okay? And this one, again, it's like as soon as it gaps up, I'm on guard for possible pullback because given the gains in place, I don't want to give back much, especially considering the state of things. So it pulls. So on the 15-minute chart, it formed a support level here. So I exit some of the position there, let the rest go because we had played it here and we were already playing it here, and so the stock was acting really well. So once some profits were taken, we were willing to give the rest some room, and then it moved up, and on this particular, I didn't get the target because on this day again, that day the market, if you look closely, it actually gapped down and actually sold off really hard the first 10 minutes of the day. And on a daily or hourly chart, it doesn't look like a big deal, but on a 5 or 15-minute chart, when you're so close to the target, that actually is a big deal. So profits taken, no negotiating for more. Kind of pisses you off that over here you were close to the target, but then on the next day you end up getting out at below 19, a full 5% below the target. But that's the way it goes. All right. So to repeat what I said at the top, you must identify what kind of market you're dealing with. Okay, is it a kind and gently trending market that's very forgiving, or is it range bound, or is it volatile with a lot of gaps? You can't force last year's management technique on today's market. Okay, the market changes, so you must make slight adjustments. The kind of market you are dealt dictates how you manage trades. Sometimes a gap up deserves time and space, let it go. Sometimes a gap up is a reason to take money off the table. Okay, this is a major error that traders make, or should I say it's an adjustment that they don't make. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button. And while you're at home, take my mini masterclass in trading. It is free. There's a link below. All right, see you next time.